Hello guys, welcome back to my channel. Welcome back to another new video. We are going to be continuing from where we stopped last time in my last video. So we are going to be learning more about market structure. So this is going to be a part 2 of market structure that we started previously. So if you haven't seen the part 1, you can go to my previous video to watch it, then come back to watch the part 2. So notwithstanding and not wasting much of your time, we are going to be diving deep into the part 2 of market structure. So as we said last week that when the market is going upwards, it's called the uptrend or the bullish trend, and when the market is going downwards, we call it the bearish trend. And sometimes the colors are mostly represented by the green and the red, but you can actually change it to whatever color you prefer. So um according to our last class, I said that the market goes up, then comes down, then goes up, then comes down, then goes up, then comes down. That is how the market behaves. But this is just an illustration. The market behaves. It doesn't. The market doesn't exactly behave like this, but it definitely gives us a swing high or a higher high, then a higher low, a higher high, and higher low. You can call it swing high and swing low, swing high, swing low, whatever term you prefer. So when the market gives us when the market gives us a swing high and goes down and gives us a swing low, it's expected that the market gives us another swing high, which is our new high. And whenever the market gives us a new swing high, that means it has broken structure. So it has broken structure according to the market structure, the rules of the market. Whenever a new high is created, the previous high becomes liquidated or becomes rendered mitigated. Or when the market when the previous high breaks structure, it makes the present high stronger than the previous high. So this is how the market moves. When another new high is created, it makes the previous high weaker and it makes the present high stronger. That's how it works. So whatever whenever the market market creates a new high, it always makes the new high stronger than the previous high. So it makes the new high makes the new high stronger than the previous high. So and the creation of new high and the mitigation of the previous low is called break of structure. Same thing goes to your downtrend a new when a new low is when a new low is created. When a new low is created, it makes the previous low weaker than the present low. So whenever a new low is in a downtrend, whenever a new low is created, it makes the previous low weaker. So when we have a swing high, swing low, swing high, swing low, this is a break of structure scenario. So creating a lower low, another new lower low is break of structure. Let's just keep this one in mind. So this is just like a brief recap of what happened last week. So we are going to be diving more into um, knowing what is since we've known what is break of structure, we need to know what is change of character. So according to what we learned, the market moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And when the market when the market fails to create when the market creates a higher low that breaks the previous higher low, then refuses to break the previous higher high, it is what we call change of character. This is what we call change of character. So, but there are sometimes that market behaves funny. Sometimes it creates scenarios like this, but still continues with an uptrend. But in the subsequent classes that we're going to be having, I'm going to be showing you how to identify things like this, how to identify a valid change of character, and how to identify um, a an invalid change of character and all that. So, but all you need to know is whenever um, we are we are at an uptrend, or we are in an uptrend, and the market breaks the previous low, and the market refuses to break the previous high, then there is a possibility that there's going to be a change of character. So what is expected for you to do is you wait a little bit and you see whether the previous high is going to be taken out, because sometimes the market behaves funny. Sometimes it takes out the previous high and it gives us our new higher high, rendering this previous high to be our internal liquidity. But we are still going to be talking about internal liquidity in our subsequent class. So let's just continue. So when it's when a new I'm sorry. So when it creates a new a new low, and it refuses to create a new high, then goes down to create another new low, then creates a new high, it's expected for you to know that there's a change of character going on. It's expected for you to know that there's a change of character. The market is changing character. That is, it is, excuse me. So the change of character is defined as the change of trend. Is the change of trend. Some people call it market structure shift. Some call it change of character, and some call it there's a lot of names called the traders call change of character, but let's just stick to our change of character. So whenever the market fails to create a new high and it breaks the previous low, this is the scenario we call change of character. So now if you are to identify the area in which the market changed character, this is where we are to mark out. So since it broke our previous low, and it refuses to break our previous high, you can just easily mark it out like this. Then just for simplicity sake, I just want to like show you where I'm talking about. So it refuses to create a new high over here, then it went down and create a new low, then went up again to went up. Okay, wait, it refused to create a new high, then it went down to create a new low, then still went down to create a new low, then goes up and refuses to break the previous high, rendering the market a change of character. So let me show you where you are to mark your change of character. this is where you are to mark your change of character. So if you are to label this place, is going to be our CHOCH. You can label it as MSS, which is market structure shift. You can label it as whatever name you want to call it, but I'm going to be calling it a CHOCH. So change of character has occurred. Same thing goes to um, a down a downtrend and an uptrend. Same thing goes to it. So when there's a downtrend going on, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then the market breaks the lower high and refuses to break the lower low, causing a market structure shift or a change of character to the upside. So this is um the downtrend scenario, change of character in a downtrend. So when the market creates a lower low, then refuses to create a new lower low and breaks the previous lower high, this is what we call market structure shift. So if we are to mark our church, is going to be around this place, to be on a safer side. So I hope we understand what a change of character is, and if there's any question, do well to drop it down below in the comment section. So now, um what we are going to be talking about next is we are going to be talking about internal and external liquidities. Internal and external liquidities. Since we've spoken about the break of structure, uptrend, downtrend, change of character, we need to know what is internal, and we need to know what is uh, an external liquidity. So an internal liquidity, I think I should duplicate this. I will need it. So an internal liquidity, as we all know, the market, I told you this, I spoke about this in our first class. I told you that in as much as I said that the market moves in swing high and swing low, it is not the exact illustrated version. This is not the exact way the market moves. There's The market moves um in internal structures. It has an internal structures that it goes it okay, let's see. According to the market, moves in different time frames. The market moves in different time frames, as you can see. It moves in 1 hours, 2 hours, 3 hours, 4 hours, 5 hours, 1 day, 1 week, 1 minute, 3 minutes, 5 minutes, 15 minutes, whatever minutes you want to, in seconds as well. So in all these time frames, there is always a break of structure, there's always a change of character, regardless of whatever minute you want to choose. So for instance, we had a change of character here. Maybe let's say, for example, we are going for change of character in maybe the 15 minutes. If there is a change of character in the 15 minutes, that means in the 30 or 1 hour, there's going to be a break of structure or something like that. So if there is a change of character in or market structure shift in our lower time frame, that means there's a break of structure in our higher time frame. So that means The market creates a higher high, then goes internal, goes internal, then creates another higher low, then goes and creates a new higher high, then still goes down to create little internal structures. So these internal structure are still valid movements of the market. These are just like children of the external structures. These small movements in the market are called the internal structure. So it goes on and on and on. It creates little structures to combine and form a new high or a new low. So this is what I'm talking about. Same thing goes to our downtrend as well. So this petty movements in the market, these little movements in the market are called the internal structure, while the big movements are called the external structure. I'm going to be labeling them. So next week we are going to be expanding on this. We are going to be expanding on this. So let's see. This is our internal structure. This is our external structure. So I call it, you can call it ERL, or you can call it EL, whatever. Um, our internal structure is IRL, which is internal range liquidity, and our external structure or external liquidity is this, the bigger moves in the higher time frame, ERL. So this is what I call the external range liquidity, and this is what I call the internal range liquidity, the little movements in the market in the lower time frames. So as a beginner, you need to know where the time frames are. They are at the top. I'm going to do a separate video showing you the basics on where to identify time frames and how to switch them and the uses. So yes, if you have any question, do well to drop it in the comment section, and I will see you in my next video. Peace.